stock futures are selling off, gold prices are lower, treasury yields are lower, and the US dollar is up across the board. This is a picture of risk aversion. What I mean by that is investors getting nervous. They're worried about the lofty valuations. They're worried about the prospect of slower U.S. growth, weaker U.S. data this week, and that concern is finally hitting, and it's finally filtering into a more significant slide in stocks, as well as a rally in the U.S. dollar and weakness in some of the high beta currencies like Euro, Sterling, Aussie, Kiwi, and the like. In general, we are seeing more and more evidence of weaker U.S. growth. Yesterday, we had the ISM manufacturing report show that the manufacturing sector is contracting. The index is below 50, and the tariffs are taking a bite out of the U.S. economy. There's a very good chance ISM Services, due later this week, is going to report the same. There's a very good chance that ADP is going to show vulnerabilities in the jobs market. So the U.S. economy, we're going to see data that shows weakness, not strength. Now, you add to that worries about layoffs and lofty tech sector valuations, and all of that is giving investors and traders an excuse to take profits, especially as we head into year end. This was a year where we've basically lucked out with the rally in stocks due to the Fed easing, but I think everyone realized that this party may not continue to go on as we get into year end. Maybe it's time to take some profits. Maybe it's time to lock in some profits and basically start to wind down for the year. We may be beginning to see evidence of that, and that may actually happen sooner this year than others. Now, the U.S. is also matching its longest shutdown ever. Today is the day. Tomorrow it's going to be a new historic milestone if the government's not reopened, and there's a very little chance of that happening. So that is also causing a little bit of concern, as that really hits the pocketbooks of Americans. So all of that is leading to risk off, and when we have risk off, that means stock market weakness. Gold, which you think would rally initially, will sell off because investors just kind of bailing out of everything and taking profits on everything. U.S. Treasury yields, they can move lower, and then the U.S. dollar will be higher against most of the major currencies as profit taking hits Euro, Australian dollar, New Zealand dollar, Sterling. Now, the Japanese yen is actually the biggest mover. It is up strongly against the U.S. dollar and all of the major currencies because the Bank of Japan, not the Bank of Japan, but basically the Japanese government tried to cause some sort of verbal intervention. They're not happy with the weakness of the yen, so they're trying to, talk it up a little bit, express some concerns about the volatility of the move, but verbal intervention is cheap. While we've seen big moves today, it may not last. The Reserve Bank of Australia left interest rates unchanged, suggested that they could be done, but due to risk aversion, Aussie is one of the weakest currencies. But, we'll keep an eye on all of that. The main story here is going to be the U.S. government shutdown, U.S. data, as well as the momentum that we're already seeing in the markets accelerate lower. I'll keep you all updated. My name is Lien with BKTraders. Like, subscribe this video if you want more updates on what's going on in the markets.